Petrol prices rising, groceries getting expensive, markets going haywire. You think it's inflation. But what if global politics is quietly draining your wallet and you don't even know it? From wars to trade tensions, decisions made thousands of kilometers away are hitting your money directly. Here are 5 ways geopolitics is affecting your money. First is oil prices. India imports 85% of its crude oil. That means we're almost entirely at the mercy of global politics. OPEC nations control supply. When Middle East tensions rise or production gets cut, oil prices spike overnight. And the ripple effect is brutal. Higher oil leads to higher diesel, leads to higher transport costs, leads to everything gets more expensive. This isn't inflation, it's a geopolitical tax, and you're paying it every single day. Second is supply chain disruptions. Remember when cars, chips, and electronics became impossible to find or ridiculously expensive? That was geopolitics breaking the global supply chain. US-China trade tensions, COVID shutdowns, Red Sea shipping attacks. A single stuck ship in the Suez Canal disrupting $9.6 billion of trade per day. Every disruption means factory delays, shipping slowdowns, and rising costs. And every rising cost, it lands on your bill. Third is depreciation of currency. When global uncertainty spikes, investors panic and rush into the US dollar, weakening the rupee. A weaker rupee means India pays more for every import: oil, fertilizers, electronics, raw materials. That cost doesn't disappear. It gets passed on to you through higher fuel prices, costlier goods, and even pricier digital subscriptions, all because of a conflict you had no say in. Fourth is stock market volatility. Markets don't just price companies, they price uncertainty. Wars, sanctions, political crises, they trigger panic selling, foreign investor exits, and sharp market crashes. Your mutual funds, SIPs, and stocks can lose significant value in days, not because the companies changed, but because the world did. Geopolitics is now one of the biggest risks to your investment portfolio. Fifth is trade sanctions and tariffs. This one's slower, but dangerous. When countries impose tariffs and sanctions, companies lose revenue, freeze hiring, and sometimes relocate entirely. The US-China trade war pushed manufacturing to Southeast Asia, not always India. Jobs were created elsewhere. Entire industries restructured, not based on skill, but on political decisions. Your career and job security now exist inside a geopolitical frame, whether you see it or not. Here's the reality. Your financial life isn't just shaped by your salary or savings. It's shaped by wars, trade deals, and political decisions made far beyond your borders. The people who understand this, they see shifts coming, they protect their portfolios, they make smarter decisions. Understanding geopolitics is no longer optional, it's a financial skill. If you want to stay ahead of how global events affect your money, subscribe to SIFT Insights, because the world is changing fast, and so should your strategy.